Hey everybody, RC Peck here. I want to talk to you about currencies. Now, it's not something we normally talk about. And right away, I've probably already lost half of you. But it's important because the currency you are paid in, right? If you're paid in dollars or yen or yuan or euro or a stable coin, that kind of invisible currency is going to impact your future more than you can think. The problem is there's a lot of instability going on right now in currency, so we have to talk about it and how it's impacting the overall market. So stick around, we're going to cover that and so much more. Okay, see you in a moment. All right, everybody, this is RC Peck with Fearless Wealth, and I want to talk to you about currency. So this impacts everyone, even if you're not over 50. It's going to impact your life. So let's jump over to the price charts right now and just start in. And I'm starting with the Japanese yen. Now, this price chart is not my usual 3.5-year time range. We are looking at, what are we looking at here? I want to look 10 years, 10.5 years. So if you look over to the most recent part of it, you can see that the yen has really just absolutely dropped down. You can also see over time, the yen has been getting cheaper to the US dollar. So the yen over the last 2 months has fallen 12% relative to the US dollar. Now, why that is a big deal. First of all, the yen used to be a place where people would run when the rest of the world got unstable, like the global financial crisis of '08 or the dot-com of 2000. That's not happening right now. People are not panicking into the Japanese yen. In fact, the yen is down about 12% this year. Now that's good in some ways for Japan because that means every export coming out of Japan, at least relative to the US dollar, is 12% cheaper. So that's going to help their economy. The problem is why the yen's falling. It's falling because the Japanese government wants to keep their 10-year treasury yielding only 25 basis points, also known as 0.25%. They don't want to get it above 0.25%. So they're having to buy a lot of their own 10-year treasuries to keep the yield down. Yes, you're hearing that. Keep the yield down to 25 basis points, also known as 0.25%. So that's really affecting the stability of Japan. And that's going to impact all the other stability around the world. So that's one currency. The other currency I want to talk about, or one of the other currencies I want to talk about, is the Chinese Yuan. Now, this currency is pegged to the dollar. So if the dollar goes up 20%, sadly, this currency goes up 20% too against all other currencies on the planet, except the dollar, because it's pegged to it. Kind of that, if it moves up or down, I was going to say 1 to 1. But here's what's going on. China's saying we need help. We need to make our exports much cheaper. So look at that. I mean, look at that price chart. It is just absolutely diving just like it was doing in 2018. By the way, right here, that was when Trump came out and said, we're going into a trade war. The US is going to do a trade war with China. And you can see what they did to their currency. They kept changing the peg. The same thing is happening right now. So now China, now this is down. I just told you a moment ago, the Japanese yen has devalued itself 12%. Let's just see what the Chinese yuan has devalued so far. 7%. 7%. So that means all those Chinese exports are almost instantly 7% cheaper. These are major economies around doing this. Okay, so there's two. And then the third I want to show you, I'm trying to think probably the best way of doing that is going over to Coin Market Cap. And they might not even have it anymore. They might have taken it out. So there is a stable coin, UTC. And you know what? They've already taken it down, so we can't see it. That has basically imploded. Now, the reason why this is important to know is because there's this whole other universe called cryptocurrencies. Behind this currency, there was one company called Luna. And here's Luna's price right here. It's basically zero. It fell 99.99%. So way back here, a long time ago, at the beginning of April, it was worth $116 a coin. And today it's worth 0.00012 a coin, also known as completely worthless. So this is the company behind this stable coin called UST. So here's the point. In the crypto world, just like in the Chinese economy world or the Japanese economy world, in the crypto world, they have things called stable coins. And this is it's basically their currency. These coins are never supposed to trade more or less than $1. That's why they're called stable coins. But the Luna stablecoin, UST, it basically went to zero. And so that is putting a big crack into crypto. Now, by no means is crypto the size of the Japanese economy, third largest in the world, or the Chinese economy, second largest in the world. But there is this economy, this crypto world economy, that is becoming bigger and has become bigger over the last decade, though it's nowhere the size it was a year ago. And so maybe the way to show this is just to show you Bitcoin itself, which is in this sideways correction here, as you can see that. And so think of maybe Bitcoin as the economy. It's a placeholder for the whole crypto world. It represents about half of the market cap of the whole crypto world. And you can see it's right at the bottom of its sideways messy trend for the last, call it, year and a half-ish. It absolutely needs to hold here. Now I can zoom in. Let's just zoom in and I can show you what I'm talking about here. Here's the exact same price I just zoomed in. It's right there where buyers have to come in. That key price is 30,000. Now the reason I'm bringing this up is just to show you that there are cracks. Things are cracking. Some things have already cracked, and it's happening. Now, on the other side of all these is the US dollar. So let's just show you that USD. I've brought this up quite a few times over the last probably, 6 to 8 weeks, that there are two major things to look at the USD. And that is, there was a peak concern right here. That was the COVID crash. And then we had the tweet right there. So when people get really worried, they panic into the US dollar. And that's what's happening right now. If you can look at the screen here, you see US dollar. That dollar is now above those two peak worry states. So that's a sign of instability for the overall market. And when I say the overall market, both for the bond market and the stock market. And I know we don't often talk about currency, but again, it's that invisible underpinning of everything that's going on. So we definitely have some cracks happening. The Japanese yen has fallen. It's a big deal that it's fallen by 12%. The Chinese Yuan falling. We can call it repegging 7%. One of the most important stable coins in the crypto world, gone, disappeared. And here we have the US dollar. If you want a stable market, you do not want to see that black line above those, above the blue right there. But in fact, that's what we're getting right now. So we're having more instability coming to the market. It's not going away. When the market is in a downtrend, and let me just bring up, this is all world. This is an all world ETF that looks at the entire planet's stock market. When we start moving into this accelerated downturn, we're going to get these bigger down days and these bigger up days, right? So expect to have 5, 6, 7% up days. That's not a sign of stability. That's actually a sign of instability. And as your brain can see, this type of correction that's happening now is very take it down, come back up, take it down farther, come back up halfway, take it down even farther. It is a very different look than, say, the COVID crash, which I'm going to call a man-made crash, kind of like 1987. So the market, though it was up on Friday, I'm recording this after market close on Friday, the market is still experiencing a lot of pain, and the bond market's not helping, the currency market's not helping. If you live outside of the dollar world or the dollar-dominated world, gold is helping. Gold is doing well if you are paid in euros or yuans or yen or almost anything but the US dollar. Okay, so the question is, what do we do? what do you do with your money? What do you do? You don't own an individual stock. You don't own an individual ETF. You don't own an individual mutual fund. That's not your strategy. The strategy is how you own it, right? So if you own, I don't know, let's just say XYZ. Do you always own it? Do you always do a buy and hold? And the answer is no, because we're going to go through these shorter periods of time where the market really accelerates to the downside. They may only last 20% of the time you're in the stock market over 30 years, but markets can fall 50 to 80% during those periods. And it's quite possible we're in one of those periods right now. So I believe the currency market cracking like that, both the yen and the yuan, that's the second and third, or the third and second largest economy on the planet. And then now you have the crypto world creating a lot of instability too. And it is not decoupled from the rest of the world. It's acting very high volatility, high dangerous moves. It's absolutely coupled and connected to the rest of the world. So really start to think about your overall portfolio and think about how that 60-40 approach or the buy and forget approach really doesn't work for people over the age of 50, because even though the market always comes back, it can take 5, 10, or 15 years to come back. Thanks, guys. Let me know where I got it right. Let me know where I got it wrong. What did I miss? What would you like me to cover? Leave it in the comments, hit the like button, share. It all makes a difference. I appreciate you being in my world. And again, let me know what's on your mind and where you think, I'm missing or what I need to talk about more. And yes, I will talk about real estate from time to time. There just aren't that many clear price charts in real estate, and real estate only updates once a month. Thanks, everyone, and I'll see you on my next video. Okay, bye.